In recent years, if we look at the US ETF markets, we also have been seeing a number of innovations, including actively managed ETFs, or even some of the smart beta idea that we talk about. And more recently, at our firm, we at the beginning of this year, we launched one of the first gender diversity ETF listed in the US that focus on a specific factor within a large US corporate index. So I think the evolution has been coming from a very humble beginning of very simple and transparent equity to more sophisticated fixed income ETFs, and then on to active smart beta.
So move on to our product development sides. In the US, they already noticed this issue because in the US, there's a lot of smaller, we call the financial advisors. They manage client portfolio, but they are not big enough as a large institution to have the consultant to provide them the allocation advice. So I was thinking, again, in the investment solution space, in the ETF industry. So the industry now, in the ETF level, there's a number of strategies already kind of simplify some of the common use liquid alternative strategy into ETF format.
Okay.
For example, one of those strategies, we look at long short, multi-asset strategy, look at absolute return. One of those strategies, we use the dynamic allocations, allocate between the equity, the S&P 500 and the VIX futures. So to prevent, so this aims to, even the black swan event, you can target to get a positive return from exposure to VIX futures.
Andy, can you cite us an example of how you help one of your clients refine his investment objectives to get the right solution?
Yeah, I think our product, offers several, the retirement pension solution about ETF, and yet the most challenging issue is that our clients, at least more than half of our clients do not know, their investment objective, and also they are not, realistic enough and understand themselves enough. So we also provide a so-called the profile test to let them, know their, risk appetite and the expectation income after retirement. They expect how much they need to invest, and so forth. Yeah, so it looks like a financial planner as well to help those for our clients to know themselves and have a well planned retirement plan and choose the right profile investment solution for themselves. That's our offering.
Because very traditional business model actually between mutual fund company and the commercial bank would be the like a B2B2C.
That's right.
And redistribution business model, and 70%, 80% what happened here in Asia, and the remaining will be the B2B, and for your institutional clients, and also B2C. But I think the fintech robotic advisory will make B2C into C2C. I mean, they will have their own community. They will dialogue each other. So from push to pull, and the C2C also will account for the certain percentage. And B2B actually no change because we mentioned solution, we KYC, KYP. But you mentioned B2B2C will be migrated or will be changed to C to B2B or B2C to B. So in that case, actually, the bank, I shouldn't say that they have to surrender for this kind of migration. But however, if the margin is good enough, if this is what the clients want, they have no chance to dominate continuously like before. Because before we bombard the market, we broadcast the market through the bank. So they have the right to choose the product through the product committee, etc. But however now, if everything can be chosen by client itself through the exchange, I think they don't have the rights to turn it down, just like before.